Hello, everyone, and welcome into crushthestreet.com. I am Kenneth Amaduri, and I'm joined today with Andrew Zatlin of Moneyball Economics. Got a new website he's launching geared to guys like us, the retail investor, people who are looking to understand the markets and get a good feel for what is going on macroly, and how that pertains to different sectors and how that pertains to your portfolio. Because one of the things that Andrew mentioned in this pre-interview here as we were chatting is looking for investments in this environment is like fishing with dynamite. And I think we're going to be talking about that today. Andrew, thank you so much for coming back on the show and sharing some time with us.
Thanks for having me, Kenneth. Hey, everyone. How are you?
Andrew, it looks like COVID is on the rise. I don't have an issue mentioning that here on the platform. It's at least in the headlines. People are getting sick, and the markets are starting to go on edge. We're starting to see reversals on lockdown, pandemic policies. Hotels are starting to mask up again. We were in Denver. The employees were saying, yeah, 2 days ago, we didn't have to wear masks, and now we're back to masks. And it just happened so quickly. I mean, we're seeing the news that a lot of people that have received the vaccine are getting sick. So it's just everything seems to be up in the air. There's no precedence. There's no real path forward, especially with the draconian governments that we have to kind of predict what the future is going to look like. And we got to figure out how to invest our money in this environment. That's what's so nuanced about this entire situation. Any thoughts?
Yeah. It's still curveball. You can look at it in one of two ways. We can go down the path of, is Delta really something we should be worried about? And there's a lot there. That's a whole meaty dialogue. Is this real? It doesn't matter, right? I'm going to tell you, I believe that Delta is a total wiffle ball. This is nonsense that we're doing this again. That's the way I look at the data. That's what Delta is really, all the data says, don't worry about it. It's just like every flu. There's a variant that comes out that's weaker and weaker and weaker. The UK's had it for a while. There are no deaths. Nothing happens from this. Okay, that's my belief, Kenneth. I'll go down that path. But it doesn't matter. Like you said, it's how people react to it. There are plenty of people who say, if the government tells me I should be worried, if the media tells me I should be worried, then I'm going to be worried. So one of the things that I do and have done for about a decade is I track hiring at individual companies. So if I look at Expedia, if I look at TripAdvisor, their hiring froze 2 months ago, right as the Delta concern started entering the picture. So clearly, whether or not we believe it's real, whether or not something that oh my God, lockdown again, doesn't matter. It means that consumers are voting with their wallets and are starting to pause some of the spending. And that Expedia, TripAdvisor, and a whole bunch of airlines too are feeling that impact. And so that, as an investor, doesn't matter whether you believe or disbelieve, it's having an effect. Now, we got to play sort of that fifth dimension chess, right? Where we got to think this through. What's happening today is that preliminary knee-jerk fear. It's materializing in certain pockets of the economy. But then you go back and you look at Lollapalooza. What was it, last week? Not one mask. You had how many people showing up to this event? So I think the problem is a political one, that the Democratic Party really used COVID to skewer Trump and get the election. Now there's payback. They will lose the midterms if they're playing with fire right now by boosting COVID again, because you take Lollapalooza, you're looking at millions of people who are basically saying, I got vaccinated, you told me I'm okay, what's going on here? The Democrats could basically die on this mountain, right? This could be the hill that they die on, because people will vote them out if they have a horrible lockdown wintertime. If you tell me I can't go on vacation 2 years in a row, I'm voting you out, okay? I'm voting you out. And so the Democrats are playing with fire here. So I think you're going to start to see right now, as if you read the press, the Biden administration, they're waffling, they're zigzagging. Well, it is, it isn't. Well, if you got vaccinated, you're okay. Well, maybe not. I mean, the reality is information flow and data flow is a lot better. We're a year and a half into this. We've got a lot better insight into what's going on. We have a new variant, Delta, got Lambda coming down. What we're not being told is, look, folks, it's a flu. Flus always mutate. It's what they do. But when they mutate, they become less deadly because they don't kill the host. And after a while, the goal of a flu is to survive too. All right, investing. So what do? I've been watching the transportation sector like a hawk, and I'll tell you why. Like everybody else, came into the year, I was so ready for a post-COVID investing environment. And I did okay so far. I have to admit, I did okay. I'm sure everybody did. But it was like fishing with dynamite. I mean, just throw it out there. Boom. Oh, look, this one blew up 10%, 20%. And look at the earnings. We're halfway through the earnings cycle, more than halfway through. And wow, they've been powerful. But everyone's asking what comes next. Okay. And as we normalize, I think we had a little bit of we got this hot money floating around there. And by the way, folks, hot money is going to be here for another year. I'll tell you why in a second. But you've got this stock market. The correlation between the pricing of the stock market and the underlying economics, it's way off because of that hot money. I think you and I were talking a minute ago. If I look at some of the transportation stocks, and they should be benefiting, right? Lockdown hit transportation stocks and restaurants unbelievably hard. You get to this point though where I compare revenues in 2019 to revenues today, and we're not there yet. We're not there yet. Getting closer, but we're not there yet. And it's not a snapback where, wait a second, come Monday next week, we're back. But the valuations are the reverse. Wait, but my stock price is a lot higher than it was in 2019. So I think now's kind of, for most sectors, a time, take some money off the table, gamble with the casino's money, gamble with the house money, except when I look at transportation. And I got stung. I don't know how many times people come on your show and say, well, that was an unfortunate investment, but I'll tell you my unfortunate investment. I did well. I don't know. Can I name names, Kenneth?
Sure.
Okay. So Robert Half, that for me was a gimme. I did well on Robert Half. And by the way, the vehicle of choice for me these days is long dated options going out 6 to 12 months, because I don't know in the short term all the weirdness that happens. Interest rates go up, the market crashes, all that stuff. But I know that long term, certain sectors and certain companies benefit in a post-COVID environment. Robert Half, we know that labor is doing bad. And again, I go back to my hiring data, and Robert Half's hiring is, it's to the moon. So that's done well. But the one that didn't work out was Delta Airlines. I sat here in April going, oh, Delta Airlines, they're back. I look at their hiring, they're hiring again. Normalization right around the corner. And at the time, I think they were trading discount to the 2019 price at 20%. They're down, damn it. They're down since April. And part of it's because of COVID. But here's what's interesting. And I'm going to double down on my move here with Delta. I might do the ETF, which is jets, because some of these things are, diversify a little bit into the ETF. But both Delta and jets are showing the same kind of thing, where there's been a sharp pullback. They're trading at about 25% of their 2019 price. Now, if you look at the history, Delta and jets, they're not like a high-tech company that's growing. They're fairly stable until we got to COVID. So my underlying rationale thought is, well, wait, when we get to a post-COVID environment and we're more normal, the stock price will jump back. So I'm waiting for that 25% jump back. I'm waiting for normalization. It's not here because we've got this Delta variant kicking in. It's not here because of that, business travel is still being held back. Some companies are saying, wait, we're planning on reopening. Let's wait another 90 days. Let's wait and see, wait and see, wait and see. And I just feel that most sectors are overbought because of that hot money. This is one sector that isn't, and there might be a couple of other pockets that aren't. But that hot money, I said to you a minute ago, I think that hot money is here for another year, and I'll tell you why if you're interested. If not, I'll talk some.
Very interested. No, this is one of the reasons why it makes it so difficult to invest, because we're at a spot now where revenues are down or we're below where we were in 2019, as you were telling me earlier. And it's like, but the valuations are up, but there's more money to chase the same and less amount of goods. So maybe that makes sense. I don't know.
It makes sense. I see two things that you want to be cognizant of as an investor. And that is, yes, there's inflation. Yeah. But man, we've got screaming low interest rates. And obviously they're related. You got the inflation because of the screaming low interest rates. The question is, when does it change, right? When does the music stop temporarily? And I think what you want to focus on is the Fed. The last thing the Fed wants is for rates to go up, for a simple reason. We are 20 some odd trillion dollars in debt. Okay. But we're paying that off at a freakishly low rate, 0%, 0.25%, 1%. Okay. we will be facing another great recession if interest rates go up to 1% because of that debt servicing. We simply don't have it. The amount of debt servicing will go up by 300 to 500 billion dollars. Okay. So the last thing the Treasury and the Fed will allow is a rise in interest rates. And so they'll jawbone. They'll say whatever they want. Beginning of the year, oh yeah, inflation's transitory. I don't know, man. I'm checking my watch. I'm 8 months into the year. It doesn't seem too transitory to me. Now, I'm partially in that camp, but let's be honest. You've hired people now at $1 or $2 more per hour. It's not like, oh, come next year, I can lower that wage. No, it doesn't happen. It's permanently baked in inflation.
I guess I intuitively understood that, but I don't know if I thought about it that way. That, I went to the Brazilian steakhouse the other day and they're apologizing because they don't have enough people working with a sign outside that says hiring for $17 an hour. That they're not gonna see those rates go down. And everything's a big mess. My mom flew in from California to come see me in Texas, and the airlines are a big mess right now because of delays and the travel and cancellations, and the big mess that goes on. Well, that costs people, and I mean just an indirect cost. She needed a driver to take her from the airport to bring her to the house. The guy had to stay there for an extra 30 minutes, so he charged an extra $50 because he had to wait around for an extra 45 minutes at the airport. So it's like it's all this indirect cost that's just not efficient anymore.
Have you noticed also the tipping economy has become sort of standard now? During COVID, I tipped anyone. Hey, if you're bringing me my food, I know you're struggling. Let me give you a tip. Okay, I'm in a normal world now. I go out to a restaurant to do pickup, and there's a tip line. And I say, it's like, well, what am I supposed to do here? You didn't serve me at the table. Times are not tough as much anymore. I'm waiting for my doctor to have a tip line when I sign in. Go to the dentist and have them go, okay, now what's the tip? It's like that's permanent inflation. It's kind of like when the airlines was a couple of years ago when gas prices surged above $100 a barrel, and they were like, look, we got to charge more for extra baggage. They never peeled that back. We went down to $20-$40 a barrel. They never peeled that back. It was permanent inflation. And that's what we have. But here's the key. They can't raise rates. Okay. They are not going to allow rates to go up simply. Now you might have rates moving in the 10-year market and stuff like that. But bottom line, you want to go out and take a loan against your house. You want to, refinance. That's the next year. You're not going to see anything. What you'll hear is over the next few months, over the next 6 months, they'll plant the seed. Well, maybe now's the time. Maybe you will not see rates going up until possibly late 2023, which means they'll start once you start talking about it. The market tries to get ahead of the ball. They can't afford to do that. So you still have, I guess the way to put it is you still have this monetary stimulus out there pumping things up. But I would say don't buy a house come January, February next year. It's peak because you're going to get locked in. Well, you might actually, let me back off that. You might have that fear of missing out next year. Rates are going up. I better buy now, better lock in now, kind of a thing, or I better dump my house. But I think overall, we're going to be plateauing in a lot of places that were direct beneficiaries of those rates. But here's then the counter. And this is the second wave. I mentioned there were two that you got to track. Monetary is going to slow down, but then you've got this fiscal plan. They're going to throw another $1 trillion under Biden, and it's not going to stop there. Now, anyone who thinks that this is legitimately about infrastructure, oh my God, we're new bridges, new highways. Come on, man, it's $1 trillion. They learned this game under Obama a long time ago. Just throw money out there. That's all. Yeah. Just throw money out there. Maybe some of it hits the wall and it is meaningful, but for all intents and purposes, another $1 trillion is entering in. And that's, I mentioned politics at the start of the show. This is political. This is how you buy the election, right? Because remember, guys, politics and money are not disconnected. So what you might see is little games playing between now and then. I wouldn't doubt a lot of money's riding on having another $1 trillion hit the market. Let's just say that. And we know that will be, normally that would be inflationary. I think instead, by the time it actually gets signed off and approved, you'll start to see some slowdown in some of this inflation. You'll start to see a little worry, is the economy really slowing down? What can we do? So the interest rate pressure again starts to, goes back to that transitory, inflation's transitory. So the interest rate pressures start to ease and so on. bottom line, I'm going to say 2022 is going to be another hot year. Right now, I think the market's consolidating because it was just on such a tear.
Yeah, and going back to that driver, it was one of the most expensive rides I'd seen to go from the airport to my house, and I think that's normal. I mean, look at what happened with the car market and the chip shortages. Everything is just astronomical. You want to rent a car nowadays? You want to get an SUV. You're paying I mean, if you're at the counter and they got you bent over, you might be paying 300 plus a day to rent a car. And I'm not, again, we've had all this money injected into the economy,
right,
but it's going out by the cost of everything that's out there. It's just not affordable to be doing these things and to deal with the economy as is. And what's materially unaffordable is housing. And I've seen this on Zero Hedge, and I've felt this instinctually for a very long time. I think, there could be a pullback in housing, but I think they're just going to continue to pump it up with all this money. And it's not going to be the average person that owns a house anymore. It's going to be the BlackRocks and Vanguard and the big money that's buying tons of houses, and everyone's just going to rent.
You're going to see consortiums. Like, I would love to start a consortium with a bunch of guys and just say, look, and I've seen these actually, Kenneth. I've seen them where people say, look, put in 25 grand each, and you create an LLC, boom, and you just buy these small homes in areas that are economically solid. And the whole key is, can I get the cash flow positive? Can you be a passive investor and get that cash flow? And I'm in a town where it supports my investment. And I think that's an interesting game to play. I think the bigger driver of this is remote working. And you and I are both remote workers to a certain degree, right? It's more when Facebook discovered that they live in the most expensive real estate around. And if they wanted to hire 1,000 people, the cost of this is just extraordinary. And they realized that if I put those 1,000 people, either they can work from home or I put them in a new facility, it's a lot more money on their bottom line. Apple is expanding. You know where they're expanding? In California? Hell no. They're expanding in Raleigh. Why? Because it's probably a third of the cost to operate in Raleigh, and you still have the talent there. Companies have said, wait a second, you're in Austin, Kenneth. You see it there yourself. Companies have said the real estate market in San Francisco Bay Area is ridiculous. I cannot afford to operate there. But if I can be more remote, and my back office folks, my finance people, my accountants, my HR people, a lot of these people don't need to be on campus. So I think that supports the housing market. That's a tremendous wave that supports the housing market going forward. And I think you saw this, for example, LinkedIn recently said, you know what, if you want to work from home, we don't care. Now that was a 180-degree shift. They had previously said, no, you got to be in the office. No, they realized, because the economics are now speaking strongly in favor of remote work, which then speaks in strongly of the housing market. And it just depends on where you want to be and what kind of city you want to be in. On a personal note, I left the San Francisco Bay Area last week. I moved to Charlotte, and my reasons were many, but I think it came down to the fact that San Francisco Bay Area is a beautiful place to be. The weather's great, the people are fantastic. But San Francisco, when I moved there in the 90s versus today, it's night and day. Just to give you an example, Kenneth, if I wanted to go enjoy the fruits of the Bay Area, go to wine country, go to Tahoe, go to the beach, it's there. But you know what? It used to be, I don't want to sound like, oh, I remember in my day and gas was 25 cents. It's not like that. It's, hey, you know what? It's gotten so ridiculously crowded that if I want to go up to Tahoe, which is a 4-hour drive without traffic, it's now 6.5 hours. Why? And you can't eat up there because it's crowded. You can't get to a restaurant. You want to go to the beach? Well, it depends what time of day, and can you beat the traffic? Parking. Oh, okay. And then they just recently passed a law. I'm not coming down on them. I'm just saying the quality of life there is horrible. It just is. And they just recently said, well, we used to limit the amount of urban growth, 1 unit. You can now build 4 homes on what we used to say was only 1. Okay, so you have a horrible infrastructure that's already overcrowded. Now you're going to quadruple it. That's thinking. Well, they have to because of the pressures. But my vote, I voted with my legs. I said, I'm out. I moved to a city that's a city. It's not as crowded. It has quality of life. We were looking at buying a home there. It was pretty funny. We were looking at buying a home in the San Francisco Bay Area. We looked at places that were 15 to 20 miles outside of San Francisco. We looked at places that were 50 miles outside of San Francisco. It's $1,000 to $1,500 a square foot. And let me put that in perspective. A 1,000 square foot house is $1 million property, and there's no land, and it's not well built. But hey, you get the Bay Area, right? $1 million. I don't see how it's sustainable. As an investor, I just sat there and said, tell me how many people can move their family. In a family, you need more than 1,000 square feet. Even New Yorkers know this, right? How many people can move in and have that $1 million, $2 million house? I don't know any millennials. So I just think they've set themselves up for a massive problem that they haven't figured out what to do. Now, it's been like this for a while, but I just think remote work is the problem for them going forward. Because again, a lot of companies now realize the operational staff. If you look at a company in terms of staffing, the bulk of the people are at the bottom. They're not the critical engineers. They're going to be HR, marketing, finance, production, whatever it is. They can be anywhere. You know, Citibank, Bank of America discovered that a long time ago. They moved all their people out of New York and into places like a Charlotte, Atlanta, things like that, because they realized they don't need to be local. I think high tech has discovered that too. And I think there was resistance until COVID, and now there isn't. So going forward, the housing market might be great. It's an interesting leveling, though. It's an interesting localization leveling. But I think the stock market, for various reasons, going into 22, 23, there's still life in it. I'm trying to find where to throw my money, but one of the things that I've been doing is doing some covered calls and just kind of picking up rent. That's really what that is.
So, Andrew, let's talk about precious metals here for a moment. Gold, seeing it at 1,800, I like seeing the 1 and the 8 next to it, to be honest with you. When it goes below 17, it's just like another demoralization. But even the way it moves now, it's not exciting.
It's boring, man. What's up? Yeah, it's boring.
It's very boring, very dismal. I saw a meme of a guy who said he wasn't going to shave, until silver goes back over $50. He posted a picture. It was 2011. He had this like long beard on. It was a joke.
Oh my God. Remember that when silver was $40? We all have our stories, right?
It defies logic. You have all this money out there. Inflation is all over the headlines, and gold can barely hang on to $1,800. It doesn't even make sense. It's almost like sell the news, sell the news, sell the news, sell the news. It's like it's pricing in what's going to happen after the crash, and after everything normalizes. It's like it hasn't even had a moment to absorb what is happening. You know what I mean?
Mm-hmm.
So what are your thoughts on this?
I can't figure it out, right? I would have expected gold to be 22, 2,400 by this point. I know some people I've read say, oh, they're suppressing the price of gold. The usual conspiracies one sees about precious metals. I'm wondering if the hot money just didn't float over to crypto. And that's what's going on, is crypto as the substitute, as the inflation management vehicle of choice. And, crypto's up to $1 trillion plus now. Maybe that's what's going on.
Yeah.
I don't know, but I suspect that there's a relationship there.
So what are your thoughts on Bitcoin and crypto as a hedge against inflation? Is this something you believe people should be? I mean, do you agree with Michael Saylor and kind of what's happening?
I've got to be honest. I'm kind of waiting for crypto to go down back to 20. And I'm the guy who bases everything off of 2019. I look at it and go, look, we have gone through some really crazy months here. A return to normal, let's define it. A return to normal is 2019. No more of the cheap interest rates or whatever. It's 2019. Okay, that's not here. It's not today. It's not tomorrow. It's in a ways. But what's keeping it lofty at 40,000? And I know some technical folks who will tell me why is Bitcoin where it is and Ethereum where it is? But I come back to, you haven't explained to me what happened over the last year. Okay, nothing you can tell me is anything but hot money and the usual fear of missing out. So I'm waiting for, I see consolidation in Bitcoin right now. And I think I can't predict where it goes from here, but if Amazon does crypto, like that came out recently, the tipping point for crypto is when it actually becomes a medium of exchange. Let's be honest right now. I can go on Craigslist and I can use Bitcoin. That's funny, right? I mean, when you're really talking, the global economy is going to say, I can price that for you in dollars, euros, or Bitcoin, right? I'm Amazon. How do you want to pay me? It's not there yet. It's not going to be there when I go to the supermarket, okay? When it becomes a medium of exchange is when crypto is taken really seriously. And people could say, yeah, but gold isn't. Gold's not a medium of exchange, and they're absolutely right. And so the question is, what is crypto? If you're telling me it's an inflationary hedge, just like gold is, and it's a digital version of it, okay, I get it. In which case, it's just all about inflationary curves. Well, wait, if it shot up because of the hot money inflation, then it's going to tip over when that passes, if and when, right? So I step back and I say, the promise of Bitcoin was that it would be a medium of exchange. Transactions could be conducted with it. There have been some attempts. Tesla, oh yeah, we'll take your crypto. Come on, man, that was value. That was just kind of playing to the bleachers. Hey, all you millennials out there, you engineers and high-tech guys who are buying Teslas, we'll take your Bitcoin. The guy's hedging it left, right, and center. It's not that he believes in Bitcoin per se, even though he has a strong position. It's really because he sold a few thousand more cars that way. Not many companies, I think a lot of companies do take it, but not many companies at the Amazon level are taking it. You show me Target, you show me Amazon, you show me airlines, you show me high volume transaction companies taking this on, then I take crypto seriously. Sorry, that I know that's it's not what your audience wants
no,
to
I
hear.
I mean, and everyone has their opinions on it, and these are the reasons why it's hard for someone like myself to say I'm going to put a ton of money, like a material amount of money, into crypto. Now, the caveat to that is I've put a more speculative portion of my portfolio very early on into crypto, so it's a significant portion now, and I don't want to sell it because I think that we're going higher from here. But to a certain degree, I'm fortunate to play with house's money
Well, crypto's
that I
not
don't
going
want to
away.
lose. So
Crypto's not going to go away.
you know what I
either.
mean? I don't want to lose it either. So, but it's a little different than saying, hey, I need to put money that I have to risk.
Well, let me be clear
today.
here. I want to clarify something if I can and cut you off. I'm going to cut you off, Kenneth. I hope you don't mind. I'm not saying there's nothing to crypto. Okay, I'm absolutely not saying that, because there are reasons for crypto to be out there. I'm simply saying I think the price is justified if it's actually actively used. Right now, it's just a big gamble. It's speculative. I'd like it to be less speculative, and to me, that's defined as if people are using it to do actual. And I know people will come at me, they'll slam me, Andrew, you're crazy. In Europe, there are thousands of companies taking it. And, Unilever, like, no. An Amazon, a Target, you show me companies of that size doing that many frequent transactions, accepting it, then it's mainstreamed. Then now, I won't wait till then. I jump in now. But right now, it just feels like it's consolidating because, again, all the reasons for it going up, I think, are starting to fade. So it's technically consolidating. But I think crypto's here. And I don't want to wear a tinfoil hat, but I'll tell you why. Because there are a lot of countries outside of the first world that need a crypto. They need to hide their money from the tax man. In the old days, you go to Iran, you go to India, gold, right? You use gold. Well, gold's big, man. You show me a way to shove $100,000 gold bar somewhere where they won't find it. Okay. Crypto, I can show you $100,000. It's right here. It's on this memory card. Okay.
Mm-hmm.
I can move my money anywhere, anytime. And so Bitcoin certainly has a place. Now, having said that, read the tea leaves. There's been a steady drumbeat of effort by the Biden administration, and not just the Biden administration, but very much an effort to start corralling crypto. And the way that they're going to do it is by saying there's a national security issue at risk here. You've already started to see it. The NSA chief has been going around. Yellen's been going around. Both of them have been saying crypto as it is an evil, and it enables evil. Using that terminology, it is used by terrorists. It's used by drug runners. It's used by pedophiles. This is a dangerous thing, and we need to manage it. Okay, I mean, you and I know what manage means. Basically means we're going to make sure that when the time is right for this thing to go mainstream, we, the Fed, have the alternative, that kind of a thing. Crypto is out there because it makes sense. Not so much crypto, but the blockchain technology makes sense. If Citibank could get rid of 10,000 of their back office people, blockchain's the way to do it. You become, it's kind of like getting rid of your lamp lighters at the turn of the century. If you can show me a way to get those lights powered without having to pay someone to go around and power them, I'm all over that. Crypto as a medium of exchange, or as a medium of exchange, has a place. And you can see it. But what's interesting is the way they're going to come at it, the government is already lining up and starting to enable discussion around how do we control this. The basis for it is it's a dangerous medium. And so you're starting to see, well, is that danger in the form of terrorism? What do I know, right? But then you've got, what's her name, coming out, Elizabeth, I forgot her name, coming out and saying, we might have to bail out the crypto economy if we don't regulate it. So you're going to start to see regulate. And the whole point of Bitcoin was to dodge regulation, right? So you'll see some of the pleasures of Bitcoin going away, anonymity, things like that. They're going to strive to remove that, which is the lifeblood of Bitcoin. What this leads to is potentially headwinds for valuation. If more and more restrictions are placed on it, I'm just postulating here, but you can see from a mile away the government's already putting out there, planting the seeds that they're going to come after Bitcoin. Maybe not now, maybe not next year, but they're going to try. And this is a bedrock platform for the Biden administration. I don't think they came up with the idea. I think under Trump, there were people also raising their hands and saying, what are we going to do? What are we going to do? Remember one thing, though, when you talk about Bitcoin, you're really going to the heart of the Federal Reserve. The banking system got its start because they were a clearinghouse for other banks. We're talking 100 years ago. If the Bank of America, say in New York, needed to cash a check with Wells Fargo out in California, you had to have a clearinghouse to make that check get cleared. And that's what the Federal Reserve was. You'd put money in the books and they would have their charts and they would clear the checks. Even today, there's a 5-day waiting period. There's no 5-day waiting period. I mean, if I do a wire transfer, it's immediate. Why? Because now the infrastructure is there. We don't need a Federal Reserve anymore to act as that intermediary. Their role is no longer needed. Bitcoin comes out and it says not only is your role no longer needed, but the traditional banking system is no longer needed. Now that's a bigger jump. And if you're the central bank, you're not going to react positively to any of this. And so the Fed doesn't know how to attack this. Now that it's $1 trillion market, crypto, all the central bankers are running around saying, there's a lot of stuff bypassing me. I don't like that. There's sort of the counter. It's kind of like having a different postal system. And I don't mean FedEx, UPS. I mean an entirely different system in place that competes and does it better. That's the challenge. So when I look, I'm not in crypto because I don't trust the valuations. It's too volatile for me. I don't trust what the government's going to do. I see them stepping in, and I don't see how that benefits pricing for crypto. In a sense, it mainstreams it, it takes it seriously. It allows Goldman and others to create trading floors and other things that legitimize crypto, right? That's a good thing. Regulation can mainstream this. It can say to Amazon, hey, when you do revenue recognition on something that's a foreign currency, you can apply those same methodologies to crypto, okay? It can be a good thing, but I have a feeling it kicks out a lot of the wild, wild west traders and things like that add the volatility. Gold, I think, is the signal for what's going on in crypto, though, back to what you were saying. Gold's not going anywhere because the hot money's looking at crypto and going, that's where I'm going to go. I'm going to do my inflationary hedging there.
Yeah. Well, I'm not selling my gold, and I think it's one of the most undervalued areas of the market. and that's what I like to buy. I mean, even I was talking with you earlier about looking at even Chinese stocks, Alibaba. I think there's an area of buying when there's panic in the street. China is in the headlines, and there may have been an overselling moment that
Mm.
happened with Alibaba, and with China growing as fast as it is. I think there might be an opportunity there. So I like to buy things when they're coming down, although sometimes that results in buying while it's on the downtrend. So I buy and I watch it go lower rather than buying Bitcoin while it's blasting through 30 and having the euphoria of it going to 35, 40, 45, 50, 60, 65. I don't always get that, but longer term, I feel like that's a good play, and I end up owning things that do have those moments. I just have to wait for them,
Yeah,
and
I
I
mean,
think
you're
gold and
talking about
silver are in those
uh,
categories.
you can't time the bottom, you can't time the top. Nobody can, right? And greed will kill you, and so will fear. I think buying Alibaba, like you said, it makes sense. I don't like to buy Chinese stocks because of how the Chinese government has that fat finger in there. Um, it's interesting. I was looking at Amazon, and let's say $1 trillion gets put into the world by the Biden administration through an infrastructure bill. We both know that's going to end up in China because people are going to buy stuff that's made in China. There's no buy USA factor in here the way it should be, but there isn't. And so you buy the companies that basically benefit on importing from China. Amazon's one of them. They're in the US. Maybe Alibaba is another one. I honestly don't know. I know I was an unfortunate holder of an ETF that had 10 cent in it. Wow, that was painful the past few weeks, and it just goes to show you how corrupt and challenging it is to the Chinese government and the Chinese system. And I think obviously that's why the US system works so well. It's because we do our best to keep stuff like that from happening and protect a lot of the stuff that we have. I'm looking at Amazon a little bit more seriously though, just in general. I think they had their run up. They got pulled back a little bit. I think lately the market, if we want to talk like timing, lately the market's hot. I think it's been consolidating and pulling back for that reason. It got overbought. It now needs to figure out where it's going to go. I think as we Friday tomorrow, we've got payrolls. I think the market's going to respond very badly tomorrow to the payrolls. I think payrolls are going to come up short. I know that I'm below consensus. Um, but overall, the next 2 months, I think, will be volatile, negative for the market. I saw a statistic out there that pointed out rightly the September timeframe, August September timeframe following an election typically is weak. And you got all this euphoria built in. You got all these promises. You got the change, the money, and all of a sudden people go, same old place, not much different. And so the market tends to wobble a little bit. I'm looking at buy opportunities primarily for December, going into December, because I think keep it big picture. People made money during COVID. A lot of people did, restaurant workers. Most of the people I know didn't pay for a lot of driving, didn't have to maintain their car as much, dry cleaning, haircuts, go down that checklist. I'm sorry, but a lot of people made money during this period. Regardless, we're coming to the very first big holiday season, a Thanksgiving, Christmas, winter vacation season, cabin fever, revenge shopping. People are going to be spending like it's nobody's business. This is like a last big hurrah. And I think that excitement is going to boost stocks going into the fourth quarter. So I'm not so sure about the third quarter, but I'm, consolidation, a little maybe taking some money off the table, but I feel pretty powerful about the fourth quarter.
All right, Andrew. So tell us about the new website, the
Uh,
reinvigoration, the reimagination of Moneyball Economics. What do you got going on, and what can people learn about it?
Thanks for the intro. I didn't mean to plug it, but I won't say no. So Moneyball Economics, basically the idea is to take a lot of the alternative information that I gather. Alternative doesn't mean like voodoo. It doesn't mean reading pigeon guts. It means there's a hell of a lot better data out there that the mainstream has yet to adopt. They've started to. And I've been at the forefront of some of it, collecting information and tracking it and showing how it's strongly correlated, and it passes the sniff test. So Moneyball Economics is all about taking that alternative information that you're not going to get in a mainstream presentation, you're not going to get from a JP Morgan 2-page tear sheet that gets sent out, and saying, here's what the meaning of where we are right now in the global economy. These are the waves, these are the things that the deep pocket money's looking at and that they're not going to share with you. And then also some actionable investing ideas. For example, looking at when I think the next wave is we're going to continue, hiring is going to go up, and then it's going to plateau as companies start to reach where they want to be. That's a sell sign. And so I'll be tracking information like that. Who is still putting their foot on the gas? Who's starting to put it on the brakes? Because you want to invest accordingly. Where do you want to short? Where do you want to be long? And that's what we're going to be focused on, is how to bring information about the mechanics of the market, about what's going on in the economy, to folks like ourselves who don't have the time to spend every minute of every day watching everything.
Andrew, congratulations on your move and this life change, and taking action, because I think that's something that resonates with me, is that you're an entrepreneur. You're someone who puts one foot in front of the other and actually does what you say you're going to do, and takes action on it. And I think that says a lot about being an investor. You have to be okay with a little bit of uncertainty, and be okay with those decisions that you make in your life. And I don't know, I've done a lot of thinking, soul searching over the last couple of years. And so it's just been an interesting last year with what has gone on with the pandemic, the changes in our world, the ability to travel, our freedoms. I mean, just so many things that are happening right now. And having 3 young kids at the house, I think a lot about the future of where things are going. So anyways, I appreciate your time here at Crush the Street, and good luck to you. And I look forward to having a conversation in short order.
Thank you very much. Thank you, Kenneth, for having me on. And everybody, be successful out there. Hit it to win it.